success of a startup more and more for me is down to one word, which is just focus.
Yeah.
We believe in the long-term mission, and for us, the mission is that we can service 30, 40, 50% of the US workforce. That's the part that for me, I repeated to the team was like, we need to be in the top 5% because if we're not, then we're dead.
Hi, my name is Micah Rosenbloom. I'm a general partner and founder of Collective, and we're a seed stage venture capital firm that has invested in startups like Uber, Venmo, and Whoop. Today, I'm really excited to be speaking with Nico Simko, the co-founder and CEO of Clair, an innovative fintech company that enables workers to get paid as soon as they finish work. When we first backed Nico and the team, the pitch was straightforward. Workers shouldn't have to wait 2 weeks to access money they've already earned. What's happened since is a more interesting story. A focus on infrastructure, a long search for the right product, including a pivot, and then a pretty remarkable run to $100 million in revenue and $2 billion in volume with a small team. Nico, it's great to be chatting with you.
It's great to be here, Micah. Thank you for having me.
I remember many coffee shop talks before we funded you and even once you were funded. I think I visited the office through many incarnations of Clair. Yeah. But take me back to the beginning. Like, what got you excited about this problem?
It goes back a little bit. So I'm not originally from the US. I came to the US for college. I went to Harvard for undergrad.
Although you have no discernible accent, so you hide it well.
I've blended over the years. But when I was in college, I, as many college students, wanted to make pocket money. But I did not have a bank account. I didn't have a social security number. I was far from having any credit score. And if you've ever been in those shoes, what happens is it's very hard to have access to a very simple credit card, which is, your paycheck is coming, but you can swipe the card and then it kind of like evens out within the next 30 days. And so during college, I was even more penalized because I was international, that my paycheck was printed as a physical check. And so the scenario was I was picking up as many hours as I thought I needed. And that actually became quite a big budgeting problem because my paycheck would run every 2 weeks and then I would wait another week for my paycheck to arrive in the mail.
Even Harvard's slow to pay, apparently.
Exactly. Yeah. And so that put me in a specific situation where I thought the system was highly inefficient. And so fast forward to a few years, I ended up getting a job at a bank where I'd still talk about the inefficiency of the system. And then Uber and Lyft launched products around 2015, 2016 to try to get more drivers to come and drive for Uber. And their solution was pay them after every ride. And that kind of created a click for me. And really the question was, how could we bring this very simple solution of if you work today, can have access to your money today, regardless of your credit history? And how can you do it in a way that you can democratize this so hundreds, millions of businesses can have access to it? And that was the foundation of Clair.
And so besides the inefficiency of waiting, which in some ways makes no sense, that you can work and literally companies or schools as large as Harvard can wait weeks before they pay you. I knew you had a real mission orientation. Talk about that for a second.
Yeah, that's I think what got me from I care about the problem to actually wanting to start a company. I started looking at the data and realized my problem that I had in college, it was a nice problem to have in the grand scheme of things. But if you look at the data, half of Americans work paycheck to paycheck. And sometimes they need to decide between paying a bill on time, paying rent on time, or putting food on the table. You can also look at the people who are kind of outside of the credit system. What you realize is that it's like 40 to 45% of the working population doesn't have a credit score, or the credit score is not in an area where they can have access to good credit. And when you think about it, you're like, okay, 50% of Americans work paycheck to paycheck. There's $500 billion stuck in the payroll system at any point that's just waiting to be paid. Like, this is so inefficient and it has enormous consequences. If you're late on rent, sometimes or most of the times, like your landlord is going to charge you $50, $100, $150 for being 5 days late to rent. And those are things that I think this liquidity kind of misalignment is something that technology nowadays can really solve.
When you started, fintech was booming. It's only continued to boom. I mean, there's a wealth of consumer apps, B2B apps, financing purchases, things like that. How have you guys risen above this competitive landscape and built, this successful company that you have?
Yeah, it was definitely not a straight line. The way we really approached it at Clair was, can we hold on to our mission, which is to make America's workforce feel more financially free? And can we just pull the thread as we launch products, as we distribute it in different ways, and figure out how we're going to get a majority of America's workforce to be better off because of our products? That's a very broad explanation I'm giving, but that first principle is really, I think, what guided us. Our first product was not the right one. Our first distribution was somewhat the right one, but not perfectly. And so we kept adapting on both fronts until kind of with enough iterations, we got to the product that it is today. But that requires a lot of resilience. And I don't know that like I fully appreciate it, how hard the journey would be to get to this point.
So let's talk about that. You mentioned the first product. And I mean, the entrepreneurial journey is, as you said, never a linear one. I mean, even Uber, which massively successful, started only with black cars and then, really evolved to UberX. And we've had a bunch of companies, including the Trade Desk, which almost had near-death experiences and then bounced back and became massively valuable. So you're in good stead. But I remember you started, I even remember pictures of it, a physical debit card.
Yeah.
Tell us kind of that beginning and why you moved away from the debit card focus.
Yeah, when we started, I basically had a very simple idea in mind, and the founding team really got behind it, which was if you're willing to sign up for a new debit card plus digital banking experience that is connected to the workplace, you should get your money as soon as you finish work instantly and for free. And that was kind of the bet of the company, was that you could lead with instant liquidity from your paycheck that is free to consumers, but in return, they would give you their primary banking relationship. When we launched that, as an early stage startup, Clair is my first company. We went kind of like full at it. We built it with the idea that this was going to be big. And what happened was about only 8 out of 100 people in our funnel, meaning people who wanted to sign up. We had 150,000 people trying to sign up for this product through their place of work. Only about 8 out of 100 would end up being monthly active users.
And they were using their JP Morgan or they were used to the banks they knew.
Exactly. And that was the biggest learning, was that as we analyzed the funnel, we put the responsibility on ourselves to try to fix some of the components of the product to try to make that model work. But the reality was everything we did, we almost entirely always landed at 8% of people in the funnel converted. And that's because that's the proportion of people who are willing to change their entire financial life to a net new digital bank they've never heard about in order to get paid in real time. But at the same time, we had so many people inside the funnel, right? So who were trying to sign up, who said, I really want your product. And when we said, which product you want, they say, well, I would like to flex my pay. So we landed on, we need to let our consumers decide, right, what our product roadmap is going to be. And so then we started spending time, and then we had great partners like payroll companies that liked the journey we were going on and who really kind of believed, I think, in what we were doing, and started saying, instead of, working backwards from your dream, let's work backwards from the feedback we're getting. And that is where the current version of Clair kind of came to life, which was to say, how do we give money to people basically default free in as few clicks as possible? And that's where what we call the gas station problem came out. The idea was you're at the gas station, it's 5 p.m. on a Friday, you're very tired, there's a line of people behind you who also want to get home, and your debit card declines. Why? Because your paycheck is coming next Wednesday, the weekend's about to come, and you're like, oh my God, like that unexpected bill I had 2 days ago is now putting me in a bind, but I know my paycheck is coming on Wednesday. Can you, in less than 2 minutes, sign up for a product that will give you money immediately in that debit card, whatever debit card it is that you're holding? And so that's where the product development process started. So it's like, how do you onboard based on information you already gave at onboarding at your job, use that data to automatically KYC you, which is what the banks need to underwrite. How can you do it in a way where you don't have to include the employer, so you can do it on your own, but it's all automated via the payroll system? And so we started removing friction, and we went on and on and on. And then we went from like 8% to 30% to 50%. And then once we launched the version of it today, we're like at 85% conversion. And some places getting to 90, and most of it is in less than 2 minutes.
So since the pivot, the last couple of years have been a rocket ship for Clair, which has really been, as an investor, awesome to see. But really, as a friend and having seen the journey, it's nice to see the takeoff. What's the last couple of years been like, both from how have you had to build the company now differently, scale quickly? Mm-hmm. I'm sure there's constantly fires and constantly things you need to do to build. Tell us about what building that infrastructure has been like.
Absolutely. I think that as everything is what, doesn't kill you, makes you stronger. And I think we learned so much out of building a product we really believed in, but it was not exactly the right level of product market fit we were hoping for. We were so much stronger because things like hiring ourselves into a problem that needed a founder, not a scale team. We didn't do that. If we could do it as a small team and just crack a problem, we would do that, not 20 of those things. Learning how to say no to a lot of things, making a list of things where we're very comfortable being a D- at so that we can be an A+ at certain things. Success of a startup more and more for me is down to one word, which is just focus.
Yeah.
You can get people who work hard, you can motivate people, you can find the right story, but at the end of the day, the execution is really down to focus. And focus is incredibly complicated because everybody gets excited about new shiny objects. Keeping the team excited about the day-to-day and honing onto your craft, is something that I think we were craving for because we really wanted this one thing to work because we knew what the stakes were at. And the team that saw us do that also took, I think, that culture. And that made us really work as, a rowing boat in sync. And what we decided to do was not to scale the team too much. So customer support, as we had to scale, was like, what kind of tools can we do? And can we get a human to train a computer and robots to basically do customer support for us? Our GC created an amazing system to kind of update some of the documentation we need to do with our bank every single week and try to do that with AI. We then started to do our underwriting a lot more with AI than we used to. And so that's how we went about it. The entire secret of Clair is we got to 100 million in revenue without an AE, without a sales team. So we did all of that basically very much kind of founder-led product sales, right? And we asked a lot of our existing customers to put in a good word with a list of people. And so we really try to focus and say, hey, how can we as a team do much more with less? And I love it. I don't know what the percentage is, but I think it's 1% of companies that are seed funded get to 100 million in revenue. It's less than 5%.
We don't have many.
And so exactly.
It's a huge milestone.
That's the part that for me, I repeated to the team was we need to be in the top 5% because if we're not, then we're dead. And also it's for us, right? My co-founder and I talk a lot to the team about why we do what we do. And the story has always been, we do what we do because we believe in the long-term mission. And for us, the mission is that we can service 30, 40, 50% of the US workforce. If it's a business that we can only bring financial freedom to 1% of the workforce, that's not very interesting. And so in order to fulfill our mission, we have to be big. And in order to be big, then we have to be an outlier.
I love that you said, you got to focus on some things that are A+ and the rest can be B+, maybe not C.
Yeah.
And we're not talking about Harvard's old grading methodology where everything gets an A. What's the one thing you want Clair to be A+ in? What's the thing that you want to be best in class, best in the world at?
Right now, the thing that we want to be absolutely the best at the world at is quite simple. If you are living in any modern workforce management or payroll system and you have worked a few hours or you've earned a few tips, then you should be able to get it as fast and as seamlessly as possible. And the entire cycle of that happening should be easy for payroll and workforce management companies to implement. It should be as automated as possible in terms of repayment. Nobody reaches out to Amazon for customer support because everything's so seamless and so much in the app. We want to get to that level of experience. If we do that very, very well, I think we would have fulfilled kind of horizon one of Clair, of being the company that has democratized access to on-demand wages. And I think we're on our way, but we're not there yet.
You have a pretty unique sale. VCs love acronyms. So there's B2B companies who sell exclusively to businesses. There's B2C companies. We've talked about some of them in the past that sell, directly to consumers. But you're sort of a hybrid. You're a B2B to C company. So you have two customers. You have your partners and you have your consumers. Tell us about how you kind of build product that meets the needs of both parties.
It's really motivating to be in a B2B to C market because if you're just direct to consumer, sometimes you are kind of needing to play with certain trends. And, sometimes you have to pay a lot of money to acquire customers. So therefore, the quality, the product you can offer tends to be something that needs to be adjusted for the customer acquisition cost. So it also favors companies already at scale and so on and so on and so forth. So I really like the B2B aspect, which is you partner, you create a product with differentiated data, but at the same time, you can still go after the consumer. That is so exciting because you can touch people's lives. From a business standpoint, what matters first and foremost is that we're a good partner to payroll and workforce management companies. That was one of the reasons also why we decided to be fully embedded. At the end of the day, we want their product to be as good as possible. There are very small trade-offs, and this is where our mission comes in. One of them was the long conversation with certain partners around every single wage advance at Clair always defaults to free, like every single one of them. And that's been since the beginning of the company. And that's not always been what partners wanted. But from a mission perspective, that's what got me and my co-founder excited about, like, let's default this to free. So as long as you're dedicated to making the partners' applications better, that you're mission aligned with their product roadmap, and at the same time, you're like dedicated to making the experience so easy for consumers, and then if there's any conflicts, the mission that decides, I think the long run, you win. Do we lose some certain deals? Yes. There's certain partners that want us to have a separate app because they don't want to invest too much. There are partners that like just want to charge, much more than we're willing to, default things to a paid feature, and we're just not going to do that.
So you're in a regulated industry. The regulations have changed even over the years that you've been doing this. How do you guys stay current, and how do you evolve the product to adhere to sort of a changing regulatory landscape?
If you're advancing money to people with the expectation of getting paid back, there's a high chance in many states that you're going to be seen as basically offering credit and therefore a lender. Even if it's free, even if it's either zero cost, there's no APR, nothing. And to me, that is a fundamental component of why at Clair we ended up saying, let's build this under a credit umbrella so that if somebody comes to us in a state or at the federal level and say, where are your licenses, what's the body of law you are following in order to offer your product, we can point very clearly to it. There was also a more intrinsic reason why I did this was because, I was on a visa and I was like, look, if I want this company to really succeed, we have to do it by the book because then I cannot renew my visa. It's that simple. We looked at every single on-demand pay solution and none of them had gone down the route of licensing themselves as basically a credit platform. Reason why is because it's extremely, extremely expensive. We just got, for example, our last state license this year and we started applying for them in 2020. So it took 6 years.
But that creates a moat for you guys.
That creates a moat.
Yeah.
And that is how I think we then started investing in it. We had great VCs who were like, guys, build a generational company, do it the right way. And that has really, really helped us recently because the CFPB, many states have come out and said to providers that never got licensed, guys, like, where are your licenses? Some of them are charging fees as a default, like who allows you to charge these fees? Where are your audits and so on and so forth? And that has created a lot of noise. Sometimes it takes a little bit of time for us at Clair to explain how we're different. But at the same time, once the lawyers look at our model, it allows us to find amazing partners because they will, respect what we've been able to build.
You shared an interesting reason why immigrants as founders may be sometimes more successful than the average because the bar is higher, both from an immigration standpoint and just sort of expectations. I guess the last question I have for you is, so we're in this beautiful podcast studio 5 years from now, having another conversation like this, or we're at a coffee shop catching up. What does the world look like for Clair at that point?
For me, it's really going back to like the mission that has over the changes in product, everything has not changed, which is to make America's workforce feel more financially free. At least at the very least, 1 in 2 Americans who need access to $100, $200, $300, $400 right now, they don't need to wait for their paycheck to arrive. They can just smooth it out. They have to talk to their employer about it. And getting to that scale for me is a proof that we have kind of fulfilled our mission. And then the other one, which goes back also to me when I was a student, is it took me a while to get my first credit card. I was, I think, 1.5 years into my job after college, so almost 6 years into the country, because my parents don't have a credit history, or they're not from here, and entering the credit system is difficult.
By the way, I have an 18-year-old, as you know, and he's applied for a credit card at the same bank. We have an account, and he has an account, and he was denied.
Exactly. And so the view is like, and this is the new product that's coming out, is like, if you have a job, this should be enough for you to build a basic credit score that allows you to get a very simple kind of like entry line credit card. If I'm a tutor and I start my job in September and I will finish it in May, okay, that's a little less than a year. Great. 9 months is more than enough to get from like no credit score to something that's basic enough that you can, like, your son walk into a branch and say, I would like a credit card. They run it. They see you've already kind of like worked a job. You built your credit a little bit, and then you qualify for a regular credit score. So it's almost like, can we graduate people away from needing wage advances Everybody just wants this card that they can use where they're going to pay it in 30 days. But if their paycheck is three days, later than that one bill that they didn't expect, it's all smoothed out. That's financial freedom, right? And so can we give that to people with the benefits of interchange that's creating points and so on and so forth? And I think if we can move more people towards that because they have a job, I think that would be an amazing, 5 years for us.
Is there a time where you see Clair being a household brand, or at least employees at major companies just know the brand?
Absolutely. I think it goes back to like not focusing too much on the scoreboard and focusing on like the emotions we want to drive to people. But I think if we do all of those things, naturally we will become a household brand because people will recognize us at work. People will ask their employer, and it has started a little bit already, like, do you offer Clair? One of the number one tickets we get in our customer support channel is like, I'm leaving my job, I'm going to the next one. How can I bring this over? So our brand is starting to start resonating, but I almost see that as we've built a great cake and kind of the icing will come on its own. And if we do the right thing for the consumers, for our partners, that will be our prize at the end.
Okay, my last question, and I should know this, but I don't think I've ever asked you. I love the name.
Yeah.
Why Clair?
Yeah. It's really simple. My mother tongue, my co-founder's mother tongue is French, and Clair means clarity in French. And one of the things that we've realized with financial services is it's based on trust. And the way you break trust in anything you do is if you're not clear with people, you try to deceive them, you try to, say one thing, but you mean another. That is how you break trust. And so what we kind of, from a product vision standpoint, we always wanted was just to be clear. Say it up front. Don't say it at the last slide. Don't say it's free and then at the end there's a fee. No. Say it up front. Those are some of our product kind of, mantra that come from the name, and we wanted Clair to be the ultimate kind of goal from a product standpoint.
Nico, it's been a real privilege to be your investor and hopefully partner and colleague, and to your co-founding team. Congratulations. And I do think in 5 years, people are going to know the brand. It will be a household name. So congrats on the progress. A lot to go. And I have no doubt you'll be very successful. So thank you.
Thank you, Micah. Thank you.